Hey everyone, welcome back to Upside Down Data. Today I want to talk about how we beat the whales. So right now, Bitcoin is currently breaking up above 30K. As I record this, we're currently trading at 30.1K. And really, Bitcoin has been on a massive, very impressive rally since the start of the year. If we just take a measurement, Bitcoin's up 82% from the beginning of the year. Quite impressive indeed. Now, why do I say beat the whales? Well, oftentimes when people think about the market, they think that the whales, the big players, the people with a lot of money, always play the market perfectly. I think a lot of people assume that the whales were all the ones buying down here, and then the whales will be the ones who sell whatever the local top ends up being. But in reality, the whales are not always perfect market players. They don't always get things 100% correct. And we can see this if we just go look at the on-chain data. So here I'm going to flip over to chainexposed.com, which has a lot of great on-chain data. And one of the things that they have over here is this whale accumulation heat map. And basically what it is it's just seeing what are the big players doing. When are they buying? When are they selling? So the way you can read this is that colors closer to red indicate buying on net from whales. They're adding to their positions. Whereas blue, the darker the blue, the more it is that they're selling. They're reducing their positions. Now, you can see that overall, they seem to do a reasonably good job. If you look at this run up here into early 2021, they were generally buying at kind of reasonable times, then distributing at around the top. Same thing with this move up here. When we look at what happened during this bear market, we can see that they made some pretty decent blunders here, especially in this move here in November of 2022 when FTX collapsed. Just look at the dumping that whales did during this time. They were exiting their positions in a pretty extreme way, which is of course the worst time to be doing that. The absolute worst time to be selling was right here. This is the time to be buying, as we of course now see through here. And really, whales didn't FOMO back in until Bitcoin was up above 20K. And we also see that in this more recent kind of sideways movement we had here before now we're breaking out, again, whales on net were distributing. You see that with the colors being closer to blue. They were on net reducing their positions here, and then off we went again. So when I'm talking about beating the whales, what I really mean is that the whales really misplayed this part of the market. At least that's what it looks like. They were not in, playing this perfectly like a lot of people assume that whales will. And the reason I say beating the market is that on this channel, when we were following the data the whole time, we were talking about through this whole period down here as, assuming that we didn't get, a massive recession like 2008, that historically speaking, this was looking like a potentially strong time to be accumulating, a time where historically speaking, the expected risk reward was quite good. And in fact, I made a video all the way back here, early June, early January, when Bitcoin was trading at around 17K, talking about how I thought some upside was the more likely direction to go. And then, of course, we saw what ended up happening after that. And I was basing that assessment, my judgment, on the data. I was looking at things like our long-term upside downside potential indicator, our risk model here at the channel, which looks at macro moves that play out over months to years. And the lower the level, the lower the risk. What I was seeing was that at that point in the market, we were quite low. We were down close to -4, which when you just look at history, has generally speaking, well, actually not even generally speaking, has always been a good time to be accumulating Bitcoin. It's never been the case that we've been this low on the UDPI, and it's not been a good time to be accumulating Bitcoin. So saying that if I had to put if I had to bet on a direction, I was thinking that bullishness was much more reasonable than bearishness coming out of that point, and that's exactly what we ended up seeing. Obviously, the whales were not looking at the data. They were probably, at least some of them, getting quite emotional and making this selling decision based on emotion, not based on the actual data. Now, obviously, there are probably some of the whales who are more sophisticated who were making the right move here in acquiring, but on net, we see as a group, whales were not, doing what ended up being the right decision, buying at this time, which, looking at an indicator like the UDPI, it's pretty clear that that was probably a bad decision to be dumping all your Bitcoin in the FTX collapse. So that's the first thing I wanted to note. Second thing, if we just look at this new model that I've been developing, the probabilistic forecast model, I put this out on Twitter, this chart here yesterday. It's currently giving Bitcoin an 88% chance of upside 6 months in the future. That's how you can read this chart. The blue line here is the probability of upside 6 months in the future. Green line is the Bitcoin price. See, this model does a really great job of navigating the market, identifying these bear markets very early on, and then also identifying these bullish phases very early on as well. And you note that, as we came out of the FTX collapse, in fact, the model is already getting bullish here, saying 6 months in the future, I think the market will be up. And indeed, that's what ended up happening. And currently, the model is still quite bullish. It's actually similar. It has some similarity to what we saw in 2019. Now, obviously, we don't know yet if this breakout is going to continue, if this is going to push us up to, the mid 30s or even 40K like some people are calling for. But certainly, it's lining up with what the data would have said would be plausible. We were at such an extreme low levels, extreme low risk, that movement to the upside was a lot more plausible than the downside. And again, this model here giving a specific probability of upside 6 months in the future, getting quite bullish this whole time, has come to pass quite nicely. And then finally, if we just want to take one more shot at the whales and say, what were you doing? If we just look at our market direction classifier, or MDC, this is our trend model, one of our trend models that we have here at Upside Down Data and on our website, partydigital.io. Go check that out if you haven't already. You'll see that we had been treating the critical levels. So basically the way you read this indicators, this teal line here is the critical level. If price is above it, that's bullish. That means you're probably in an uptrend. If price is below it, that's bearish, meaning you're likely in a downtrend. And what you'll often see in these bearish periods is the market treat the critical level as resistance. We treated resistance here, short uptrend here, short uptrend here, resistance into that big crash, and now we've been going off to the upside, holding it as support here in this dip. And so, if we want to take one more shot, here's more data showing that if you were a whale, why were you even in Bitcoin at this point? We were in this nasty downtrend, except for some small kind of swing trades through here. Mostly speaking, when you came back up to this critical level, you saw a breakdown below it, that means that a lot more pain was coming. So why were whales so heavily exposed to Bitcoin at this point to have to sell that much at that point? Really what the MDC was telling you this whole time is that there's probably not a time to be super long on Bitcoin until we got this decisive break above the MDC critical level, in which case the tenor of the market changed, the sentiment of the market changed. So when I'm talking about beating the whales, it's actually the case that whales do not play the market perfectly. On net, they get more right than they get more wrong, if we just look at a chart like this, most likely. But they're not playing it perfectly. They're not maestros. They don't have crystal balls. They can't see what's coming in the future. And they're still probably susceptible to emotion, just like everyone else, or at least notable segments of that whale population are. And so if you want to talk about beating the whales, one way that seems to be a relatively easy way of doing that, just looking at this, is follow the data. Ignore emotion. Don't fall victim to those things that always lead people to lose money in these markets. What are the data actually telling us? And let's make decisions based on that, not based on our emotions. So now what's going to be interesting to watch is see, do whales FOMO back into the market again, like they did up here? So if Bitcoin continues its breakout above 30K, moves into the mid 30Ks, do we get whales suddenly FOMO back into the market and then help us catapult us up to prices that are even higher? That might be one scenario where you could target something like 40K plus. Is if suddenly all the big players decide, I don't want to miss out on the move. I'm going to dump all my money in now, create a bunch of demand, really move price up, especially if people continue to try to short the market. You get a combination of a lot of demand plus a lot of short squeezes. That could be quite a potent combination for some continued upside. Still too early to tell, and we can see that so far, whales seem to be still distributing on net here. But if this starts to change into these kind of darker reds, that might be a suggestion that new demand from whales is showing up that could push us higher, maybe some renewed FOMO. And again, the whales missed it at the best opportunity, or at least a lot of them were selling at the absolute worst time. They might be trying to make up for lost time. So of course, none of this is financial advice. You should make of these data as you will and navigate the market as you see best fit. But I did just want to make this point because I think that a lot of people have this mythology about whales that they kind of control everything and they play everything perfectly. Does not seem to be the case, and it actually is totally reasonable to think that you can actually gain better insight into the market than whales by watching data, by using a data-driven approach, because that's exactly what we see. These metrics tell us a much better way of thinking about the market than just looking at what whales actually did, at least looking through this bear market period. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. A lot of updates about our indicators and more over there. And check out our website, polaritydigital.io. We have the upside downside potential indicator and much more in real time over there.